In this video, we are going to be analysing Bed Bath & Beyond, ticker BBBY. So, to get straight into it, first you can see we are at $6.62. So, obviously we are coming down very close, or basically hit this $6.45 low that we hit about a week or so back, and we did get that nice temporary bounce, but it looks like we have overall failed. We are going to continue down. So if we do, what are going to be key support levels to note? So we do have a support at around $6. This is our statistical mean on the 6-month chart. So if we break this, we can see we kind of bounce off it once. We look like we may get a small temporary bounce, but really overall we would expect to break below this $6.10. Break below it, come back to retest it, and this is the important part. If we retest this and fail, then really this stock is probably done. The momentum's probably done, at least for the time being, and we would expect at a minimum a push down to that 52-week low, so around $4.25. Now if we break that and continue lower, then really our final targets would be at $2.35, because those are the only two statistical deviations we can use going lower. Obviously I know a lot of the people watching this aren't going to like to hear that, but that is just what makes sense of a technical analysis standpoint. So if we do continue down, 610 is that support. If we break that, expect to move down to 425, and again if we break that, then really if we break this 425, we are going to be in free fall. This stock is probably going to be very weak and come down to $2, but this may actually provide some good buying opportunities, because on a stock like this you tend to get these relief bounces, 3-6 months down the line, whatever it is, you tend to get these random pops. And so if you can get it at something like $2, it may actually be an alright thing to buy, because you could be looking at these potential bounces. And to be honest, that's probably the only time I would be looking to trade Bed Bath & Beyond. I don't personally buy small cap stocks. I don't think they're worth the risk. But if it does come down to $2, it would be something I'd just probably buy a bit of small size in, and then if a pop happens, cool. If it doesn't, it won't matter, because again, it will be small size, amount I'm willing to lose, especially when you're trading these kind of stocks, because more than likely you will lose. Now going to the upside, what are going to be key resistance levels? $7.75. $12 and $13.25. Really, these are the only ones you need to note, because the $7.71, if we bounce off this 610, then that would be the level we would expect to bounce to, and then probably continue down. But on the other hand, if we can break this $7.75, come back to retest it as a support, and then we could expect to push to $12 if that level can hold. Because what you saw, we got that bounce here, or we got that break over the $7.75. We came back for that retest all the way over here, and you can see we failed it, and that is why we continued down. We got the retest here. To make it as clear as possible, we got the break below, we got that retest, and then we failed, and that's why we pushed down to that next level. So it's why it's so key to watch for the retest. There's no point buying it just as it hits that level, unless you're looking more on the short side. For example, the first time it hits say $12, yes, you may be able to get a short play, but if you're trying to play these stocks long, and especially in these small cap side of things, it is more risky to play them long, because they do get their sharp declines. You can see basically how long it took to get up. Well, not even long, but how many days it took to get up, and it only took 2 or 3 days to fall. And that's a big risk when trading these stocks long, and it's why usually these kind of things I'm more short bias, or not. I tend to trade them more short bias when I used to trade small caps, but again, I don't trade small caps anymore, just because there are a lot of added risk when I can do the same thing just with large cap stocks, and just trade them a different way through risk defined options. But either way, these would be the key levels. If we break the 610, retest it and we fail, expect to push to 425, and on the other hand, if we can break 775 and come back to retest it as a support and it holds, then over time you could maybe expect to push to $12. But again, I wouldn't be super confident on that move, just because it is a kind of stock you don't, unless there's some kind of hype on it or it gets pumped again, it's really not going to push that low, because it's not pushing there on a fundamental basis. Anyway, I hope you enjoyed the video. If you did, why not drop a like and subscribe, and check out this analysis video here.